invite our panel of industry stalwarts who have graced this event with their presence to share with us their insights on the theme for today, Indian banking landscape, dynamism and optimism, with our moderator Tamal Bandyopadhyay.
You can't have a bigger panel in Indian banking space. Is the worst behind us? Is it a right approach to say that we have completed the phase or near completing the phase of recognition of bad assets?
You heard the DG himself say that there's a reduction in the rate of addition to NPAs. So when you say is the addition to NPA going to be over, there's never going to be a scenario in banking where there would be no additions to NPA. But I think the rate of additions to NPA has definitely slowed down. NPA is not just about recognition. NPA is, we talk of recognition, we should talk of resolution, we should talk of recovery. So the positives here are that the resolutions seem to be moving in a time-bound manner. If not 180 days, 270 days, but there's a finite time-bound manner in which resolutions would happen. Secondly, I think this also forces all the stakeholders to sit together and arrive at a certain decision in a time-bound manner. So again, the delays that were happening on account of non-arriving at decisions, I think that also moves better. The third is that for the operating assets, we are actually seeing very good interest. Well, we have to still see what exactly are the values that we would get in these assets. But broadly, the thinking is that for the operating assets, we should get good values. For the non-operating assets, maybe it may be liquidation value.
So tell us, where do you see in which phase we are? Is the worst over?
The recognition is happening more aggressively. And we might see some of that flowing into the last quarter. It's also possible because some big ticket transactions came along the way at this point of time. But what I'm definitely seeing and envisaging is that the extent of recovery is probably going to be stronger, as a consequence of which the absolute NPA levels are probably going to get stabilized. If not this quarter, the following quarter. In that sense, I feel optimistic of the outcomes. Every day something is happening, yes. Some resolutions are happening.
Yes. Pramit, for the industry, is the worst behind us? Is there cause for optimism?
See, first of all, I think I understand that every time there's a conversation around the banking industry, we're inevitably drawn into this discussion around NPAs, but I just think that it's not necessarily correct to paint the entire industry with one brush, because 100% of the industry does not suffer from this problem. And I think there are many parts of the industry that continue to do well, continue to grow, and continue to take advantage of the economic progress and the opportunities that come along with it. The second is going back to this whole NPA issue. I would suspect that if we were sitting here exactly a year ago and having this conversation, and we would have predicted that 1 year out, this is the amount of progress that we would have made as a country, as an economy, or as an industry, I think we would have been surprised.
I just want to take off on what Pramit was saying about the asset quality issue and where it's coming from. And one, of course, is to look at banks, but I think the other way to think about it is sectors. And if we look at the consumer sector, the SME sector, and the large corporate sector, much of the asset quality problem in this round of the credit cycle has come from large corporate lending, specifically project loans. And given everything that RBI has done around recognition norms, tweaking them a bit, accelerating recognition, I would agree that recognition is largely behind us. I won't say it's fully behind us, because there may be some sectors where there is still stress to get recognized power in particular, and we've said that openly in a lot of our results meetings as well.
Sir, you are the most valued Indian bank, and you also said just now you are the fastest growing bank. That I did not know. This part was... No, that is the fastest growing. Okay, sir. So tell us, what is your take?
So my take is reasonably simple. Firstly, banking is a simple business. So you price to cover your cost and your probability of default and a return to the investor. So the level of NPAs is not important. What is really important is whether your probability of default on your products matches with your pricing. NPAs will come, NPAs will go. That is a part of banking. If you price it right, you can provide for it. Now what is happening is that most recognition has happened. Little bit here and there because of differences in the timing of the economy picking up. Could result in things going up and down, but the major recognition of a phenomenon which had a business cycle which hit the banks on the wrong side has been taken into account.
Thanks, Mr. Puri. Sir.
With confidence, I can say that if you look at the stressed assets and forget the differentiation for a moment between a stressed asset and NPA, then that stressed asset level is not going up. Then there was a time when most of the sectors seemed to be stressed. But now, if we analyze sector after sector, some of the sectors are on a recovery path and some are still not. And recognition, if it does not happen, in some accounts it will happen in this quarter. Resolution part, because NCLT is a time-bound process, at least whatever cases have been referred up to 31st December. So the timeline is that by September you will have the, what you call the resolution. Resolution means
270 days.
270 days. Yeah. And if, in 270 days they have to be resolved.
So give them a big hand. All of them are very candid.